and welcome to Startup Street. I'm Arundhati Ramnan, and with me as usual is Shruti Mishra. These are the top headlines from the startup world. InfoEdge initiates a forensic audit into Rahul Yadav-backed prop tech startup broker network, says the company is not providing details of financial transactions, even though it is contractually obligated to do so. InfoEdge has already written off its 280 crore rupee investment into broker network.
Pixel, the first Indian space tech startup to launch a private commercial satellite, has raised $36 million in a Series B funding round. Onboarding Google as a new investor, the new funds will bolster Pixel's plans to launch 6 satellites in 2024 and 18 more by 2025.
Asset management company Janus Henderson has further cut its investments in PharmEasy. Janus Henderson has cut the online pharmacy's valuation twice in 2 weeks, having first marked its valuation to about $2.8 billion as per reports.
Meta is asking employees assigned to an office to come in 3 times a week beginning in September. As per Bloomberg, the move is part of the company's broader push to work more efficiently. Employees who are already remote workers can remain distributed.
Elon Musk is being accused of insider trading in a proposed class action by investors accusing the Tesla CEO of manipulating the cryptocurrency Dogecoin, costing them billions of dollars. In a filing in Manhattan federal court, investors say Musk used Twitter posts, paid online influencers, and used publicity stunts to trade profitably at their expense.
Those are the headlines we've been tracking for you this evening. The top story today: InfoEdge has initiated a forensic audit into Rahul Yadav's second startup, 4B Networks. This comes after it marked down the value of its invested stake in 4B Networks to 0 in February this year. In 2022, InfoEdge subsidiary All Check Deals India invested 288 crore rupees and became its biggest investor with a controlling stake. InfoEdge says it has initiated the forensic audit after 4B Networks had failed to give it details of where it had spent the money. InfoEdge has sought information including details and particulars of financial transactions and such other aspects from 4B Networks and its current management, which 4B Networks is contractually obligated to give, InfoEdge said in a filing with stock exchanges. However, as 4B Networks has repeatedly failed to provide AIPL with such information, as a consequence, AIPL has appointed Deloitte as the forensic auditor. InfoEdge told us, and I quote, "We've been advised by our legal counsel to refrain from engaging with the media until the ongoing forensic investigation is completed. We understand the importance of transparency and will provide updates as soon as we are able to do so." End of quote. Rahul Yadav did not respond to our queries. Now, founded in 2020, 4B Network is a matchmaking platform that connects brokers with properties and brokers with buyers. By June 2022, 4B Networks claimed to have 50,000 brokers on its platform and had facilitated 1,000 crore rupee worth of loans, home loans by then. It had 500 employees, with Yadav serving as the CEO. But exactly a year later, InfoEdge has not only marked the company down to 0, this surely, of course, brings back some uncomfortable memories for Rahul Yadav, who had a tumultuous stint with Housing.com in 2015. In a series of events which had captivated the startup world, Yadav was eventually fired from the company. Housing eventually was sold off to PropTiger and has since been meandering as long as one of the country's many real estate platforms. It remains to be seen what the financial audit will uncover, but it appears that Rahul Yadav's second entrepreneurial stint is imploding even more spectacularly than his first. Now, moving on. KarmaLife, an earnings-linked financial solutions provider for the gig and blue-collar workforce and an early wage access platform in India, has raised 44 crore rupees in an extension to its pre-series funding round led by Krishna Bhupal's family office and existing investor Artha Venture Fund, amongst others. To talk to us about the road ahead, joining me now is the co-founder and CEO of KarmaLife, Rohit Rathi, and managing partner Artha Venture Fund, Anirudh Damani. Also joining us is my colleague Arundhati. Rohit and Anirudh, welcome to Startup Street. Rohit, let me start with you. With this fundraise, you claim that KarmaLife's valuation has jumped 5 times. Can you give us an approximate figure? And also, if you could take us through your expansion strategy, what new geographies you're eyeing, and talk to us about the new offerings in the pipeline.
Thank you, Shruti. Thank you, Arundhati. We grew almost since its extension of the previous round. We are very happy with the valuation which we got. I would also like to thank all our investors, because it's a very new segment. It's a very new category. You're showing the face, showing the trust in our mission is really encouraging for us. We grew almost like 500% in last financial year. For us, with this raise, the plan is to go both deeper into the segment where we operate in. We are very strong in some of the segments like logistics, employment, transportation, mobility, food tech. So our plan is to go deeper into that part. And at the same point in time, we are also discovering the new use cases, new B2B partnerships where the same use case can be applied to their contract workforce or the gig workforce or the people who are in the lower income bracket. From geographic point of view, we have always been very agnostic of geography. We serve pan India. Even in tier 4 towns also we have a very decent presence there right now.
All right, so you have a presence in tier 2 cities as well. But Anirudh, let me bring you into the conversation. Talk to us about what made you invest in Karma Life. What excited you about the venture and the space?
Hey, thank you, Shruti and Arundhati, for having me on the show. So I think that for Karma Life, lending as a theme has been very large as a part of our portfolio. And I really like the team, Naveen, Buddha, and Rohit, right? They have just had the right mix of experience and execution that was great for this space. However, now, if I come back to the space, micro-lending or microfinance has been part of the Indian ecosystem since the 1980s. But if you look at the gig workers, 77 lakh gig workers today, and it's expected to go to 2.5 crores. They haven't had solutions specifically built for them, and this sector is growing at a rapid pace. So where do they go to meet their daily cash flow requirements? They either take up 3 or 4 gig works, or they go to predatory lenders that are then lending at usury rates, right? Really, really high rates. So that's exactly the space that was right for disruption, and we loved what Karma Life was doing. It was working not directly with the last mile person borrowing, but working with the companies and helping them help their workers, and that would improve retention, improve employee satisfaction. And so I think from many aspects, the fact that it was helping gig workers stay on their feet, they could also focus on one job. It was improving employee satisfaction, and the way it was doing a B2B2C kind of lending. I mean, all of these things made a lot of sense,
right.
And we've been really happy with the numbers.
So you've been happy with those numbers, Rohit. Let me ask you then, take us through your B2B2C model, Karma Score, and the partnerships you have made so far. Tell us how you're helping your clients give their employees an option to access their payout before payday.
Sure. So when we started back in 2020, if you talk about the segment, there is institution does not really want to lend to this segment because there's no verified income source. Most of the people are migrant when they come to the city to work for these kind of jobs. So what we realized that the best way to actually address the concerns, best way to really reach out to the people would be through the employer partnership. Make employer or the platform as a key participant of the entire solution. We signed up with the largest one of the largest e-commerce player in the country, and pitch this idea that we would like to give the credit solution to your gig workers, the people who makes the delivery. So the way it works is that we do the partnerships with the employer partner. We get access of their work data, and we utilize that to define or do the underwriting for the workers. We have a very liberal view on the eligibility because you can't really take a very stringent view of bureau-based scores and then don't make people eligible for that part. We developed our own proprietary algorithm called Karma Score, which is a blend of your transaction history, your work history, and your metadata which we receive from the devices, and we combine all three to design something called Karma Score, which helps us to not only identify who should be eligible, but what is the right limit for them. And from the benefit to the employer, they have seen that the retention have increased significantly. Churn is one of the biggest challenge of the space where we operate in. On a monthly basis, almost like 20-30% of people get churned out when you are a delivery person working with a logistic company. With our solution, they have seen that the reduction in the churn is between 30% to 50%, which is huge for them.
Okay.
And on the other side, they also see that the retention or the income has also increased on an average 32% level for the user. So they use this as a retention engagement tool. Our platform, our product as a retention engagement tool also, apart from the user getting access to the
Rohit.
affordable price.
All right, Rohit. So early wage access not only helps disrupt predatory lending models, but it also incentivizes employees to stay longer with an organization. Rohit, one final question I wanted to ask you, and if you could quickly answer that. Take us through your business and revenue growth numbers. How many blue-collar workers do you currently serve, and what is the road to profitability looking like for you?
We till now we have touched, almost like 2.5 lakh people. We have served them. It's, as I said, it's a very new segment, and if any new segment needs a very high gestation period. Luckily, we are now starting to see that part. Almost every platform we work with have started to see the benefit. Previously, when we pitched this idea, it was just a theory that, it was just a hypothesis that it's going to actually help them. We will be a profitable company in this year. Right now, also our net burn is very low. We were always a unit level positive company. Our NPA numbers are negligible. And last 1 year, our NPA was 0.1%, which is the lowest across any financial institution right now.
Right.
And the reason for that is the commerce code and other development which we have done with the work data.
Right.
So the plan ahead is to deepen our credit offering. Also launch we are doing a beta pilot for one of the product called Saving at a Source, where user can actually save it from their payout.
Right.
We're also trying to launch a closed loop commerce where our user can actually utilize the credit which we are giving it to them.
All right.
So that's how we're looking at.
Yeah.
We will be profitable.
So big plans going forward, and you will be profitable this year. All right, Rohit and Anirudh, thank you so much for joining us on Startup Street today.
Thank you. Thank you so much.
Thank you.
All right, moving on. B2B grocery marketplace Jumbotail has recorded a 100% year-on-year increase in gross merchandise value, reaching 2,262 crore rupees in FY23 from 1,128 crore rupees in FY22. The company is now eyeing to more than double its net revenue, driven by an increase in both the GMV and margins of the company. So where does its FY23 revenue stand? What's the path to profitability looking like? And what more is on the plate for Jumbotail? To answer all of these questions, I'm now joined by the co-founder and Chief Operating Officer Ashish Jina. Ashish, welcome back to Startup Street. You've recorded twofold growth in revenue in FY23 with GMV going past 2,200 crore rupees. What have been the key growth drivers for your business? Also, what do what your revenue numbers look like in this fiscal year, and how much cash are you burning at the moment?
Thank you for having me, Shruti and Arundhati. I appreciate you, giving us the opportunity to share our story. I think just to start off, right, this growth that we've seen over the last year is a continuation of growth that we've seen even the previous year. So if you look at the previous year, we grew 3x on net revenue, doubled the GMV. Similarly, this year, doubled the GMV, doubled the net revenue, and that trajectory is expected to continue. I think GMV will grow about 70-80%, and we'll more than double net revenue going into the next financial year as well. So FY24, we will again continue the doubling of net revenue.
And along with a 100% rise in GMV, Jumbotail also claims to have achieved profitability for 1/3 of its business. So tell me, Ashish, which verticals of the business have turned profitable? If you could also give us the market share, and when can we expect Jumbotail to turn fully cash flow positive?
All in due time, Arundhati, Shruti, we're building a very large business. I think the way we look at profitability in this business is city by city profitability. This is a very local and regional business, and so each city has to get to profitability. So what one very big milestone I think for us, and this is probably one of the first, if not the first company, actually it is the first company in this sector that's been able to do this, where Bangalore and Mysore, which account for about 1/3 of our business, are now actually fully profitable. They fully cover the cost of operating those cities, and using the same playbook, we expect every other city. So we do about 22 clusters in 50 cities all across the country. Every one of them will be profitable in the next 9 to 12 months.
Okay, 9 to 12 months. In FY23, Jumbotail Logistics shipped 1.1 billion units of products. So Ashish, tell me, how have you been able to do this? Also give us a sense of how many orders do you clock in a single day, and how much money are you making per order?
So the right way to look at this, Shruti, is actually not per order. I mean, we are a business that operates milk routes. So a vehicle actually goes out and delivers anywhere between 50 and 55 deliveries a day. So the way we look at the business is, on a daily basis, we do about 800 to 1,000 trips, 1,000 vehicles on the ground. 86% of those, 86 to 90% of those are already profitable in the way that they do the delivery, and that's the first step towards making cities profitable. And therefore, that's something that we're very excited about. That number was about 55% about 4 or 5 months ago. So we're seeing a very, very dramatic increase in the trip level profitability and the vehicle level profitability, which is the key to profitable growth in this sector.
Yes. And you're currently serving over 2.5 lakh Kirana stores across 50 major cities and towns, like you mentioned. Going forward, Ashish, what does your expansion pipeline look like? What are some of the key targets you have set for yourself for FY24?
So the goal over this financial year is to go deeper into the cities that we're already in. We're already in cities which probably have 20 crore people, so no shortage of food and grocery demand in these cities. We'll go to from about 250,000 to about 4 lakh retailers, 400,000 retailers over the course of the year. And that we're a very urban focused business. So metro tier 1, tier 2. Goal is to get to about 1 million outlets over the next 3.5-4 years. I think that's where the vast majority of consumption in our country is coming from, and that's what we want to target. We want to be the de facto preeminent platform for brands to actually reach consumers through the Kirana ecosystem, and that's really what we're executing.
Okay.
As far as our J24 business, which is enabling Kirana retailers to actually turn their stores into modern convenience omni-channel grocery stores. This is a business that has presence in Bangalore. We believe this is what the future of Kirana retail in this country will probably look like. And therefore, we're very excited about that business. That business will scale to about 300 stores, serving about 1 million retailers, a million consumers in Bangalore.
All right. One final question, Ashish. You last raised 75 crore rupees debt from Altiria Capital and Innovin Capital. Are there any more plans to raise more funds by the end of this year to fuel your aggressive growth plans? And also, I believe there are plans to hire top management. If you could elaborate on those as well.
So, aggressive growth plans don't necessarily mean, more burn. I think that's one thing that we've been very clear about. In fact, in our case, the way that we grow actually reduces burn. We've actually significantly seen, reduction in burn. As I mentioned, every single city will be profitable from a direct cost perspective, operating cost perspective by the end of the year. We definitely, we're very fortunate to have, a lot of capital providers already on the cap table. We will raise some capital this year. Part of the process of actually building a large, generationally relevant company is going to be to bring in great people. So, across, engineering, product, category management, different parts of the business, we definitely will be looking at hiring some, top class talent.
All right, Ashish, we've completely run out of time, but many thanks for joining us on Startup Street today, and we wish you the very best for all your growth plans.
Thank you so much.
On that note, it is time for us to head into a short break. But coming up next, generative artificial intelligence-based video creation platform Gan.ai raised $5.25 million in its seed funding round. We put the company's CEO on the hot seat to find out the company's fund allocation plans, key offerings, and more. Stay tuned. Welcome back. You're still with us on Startup Street. Gan.ai, a generative artificial intelligence-based video creation platform, has raised $5.25 million in its seed funding round led by Surge, which is Sequoia Capital India's rapid scale-up program. Emergent Ventures and other angel investors also participated in the round. Gan.ai helps organizations enhance the video creation process and reach out to their audience effectively by making personalized landing pages for customers and delivering customized videos via preferred communication platforms. Joining us now to discuss this further, Subrat Bhushan, the CEO of Gan.ai. Subrat, thank you so much for joining us on Startup Street today. Like I said, you're a personalized human video platform that helps brands drop tailored video campaigns. Talk to us about how you use AI to do this. Give us some use cases.
Thank you so much for having me here, Arundhati. So Gan.ai essentially helps you create personalized videos. So if you want to reach out to all your followers, if you record one video saying, "Hi, Subrat, thank you so much for taking the time to watch CNBC." But if you want to send it to all million followers, you'll not be able to record 1 million videos. With our platform, you just have to record one video. We upload an Excel sheet or a CSV of 1 million names, and we'll generate 1 million videos saying, "Hey, Roy, thank you so much for checking out CNBC," or "Hey, Anupreet, thank you so much for checking out CNBC." Essentially, you just record one video, you define the variables in that video, and we can reach out to all your followers, all your customers in a one-on-one fashion as if you recorded that video just for them. This can enable brands like MPL reach out to all their customers with their brand ambassador like Virat Kohli, calling out their name, calling out the city, calling out an offer amount that has been added to their account. This can be used like with brands like Zomato, which ran the Man Kiya Zomato Kiya campaign as well.
Right. So you've explained to us how it works essentially. How quickly are you able to make these videos? Talk to us about what you have on offer. Apart from videos, what else can your clients do using Gan.ai?
That's a fantastic question. So we need only about 2 minutes of data to be able to learn someone's voice and their lip movement. What the process essentially involves is you recording one actual video that you want to personalize and reading a 2-minute training script that we provide to learn what your voice sounds like and what your lip movements look like when we're changing the words that you're replacing. Brands use us to generate these videos at scale. We can generate these videos in anywhere between 10 to 15 seconds in real time, in a real-time setting, and brands can scale up to 10 million videos in 24 hours that can be generated for their customers.
All right, and let's come to the fundraise then. You've raised over $5 million in this round. So how do you plan to use these funds? What's the fund allocation plan at this point?
So the funds will essentially be deployed to scale up our engineering and our go-to-market teams. We're essentially rapidly expanding both in India and overseas in the United States. We're essentially developing very cool R&D products, which will essentially allow you to get rid of the 2-minute training data requirement that it takes today to learn your voice movement. That will essentially allow brands to be able to go time in real time, allowing you to simply record a video and going live without having to record any additional training data, without having to wait for a few days to be able to learn your voice movement. We're essentially rapidly expanding overseas and hiring a sales team in the US as well.
All right, so rapidly expanding in the US. So talk to us about the clients that you're kind of catering to. How are you helping them engage more with their customers and helping them drive sales? How do you plan to grow this client base? And apart from the US, are you looking at any other international markets?
So today in India, most household consumer-facing companies that you can think of, including Swiggy, Zomato, MPL, Samsung, Bajaj, Vivo, they're all customers in different shapes and form. In a couple of years, we expect every single household name that you can think of or interact with, every single large consumer company to be our clients and use us to engage with their customers. Overseas, apart from large consumer-facing companies, we sell directly to realtors, to real estate agents, to loan sellers, to insurance agents, to car automobile dealers, to essentially reach out to their customers in a one-on-one fashion. Wherever the sales process is driven by an individual, where there's a human personality that's involved in the sales process, they find tremendous value in using our offering and reaching out to their customers via video, which is essentially the best medium to consume and which is the medium with the highest amount of engagement channels for customers.
All right, and what about revenues? What's your revenue model and what are your current revenues at? Give us your targets as well going forward.
So our revenue model essentially involves charging by number of videos generated. So it scales with whether you're looking to generate 500 videos per month or you're looking to generate 50 million videos per month. Our revenue has been growing rapidly. We've essentially doubled our new revenue added for the past couple of months straight. Our US expansion has taken off really, really well. It's at a point of inflection. We increased the number of paid customers in the US by 10x over the past 2 months as well. We're essentially chasing a path to profitability. We hope to be profitable on a net revenue basis added in the next quarter or so. And essentially, we're adequately capitalized to hit $10 million ARR in the next 24 to 36 months.
All right. So on the path to profitability there. And what's the revenue mix between the US market and the India market at this point?
So that's again a great question. So, as of early this year, 90% of revenue used to come from India. We've only been actively operating in the US for the past 3 months or so. And for the month of May, we expect, our revenue added from the US to actually exceed the revenue added from India.
All right. Okay. All right. Thank you so much, Subrat, for joining us on the show. And we wish you all the best going forward.
Thank you so much for having me here.
Yeah. On that note, it is Friday and it's time to take stock of all the startup deals this week. According to Venture Intelligence, this week saw 10 deals worth $110 million. Some of the notable deals include customer loyalty platform Capillary Technologies, which raised $45 million from Avatar Venture Partners, 57 Stars, Unigestion, Filter Capital, Innovan Capital, and others. Space tech startup Pixel got $36 million from Radical Ventures, Lightspeed Ventures, and others, while laundry services portal Laundry Mate bagged $6.25 million from Bloom Venture founders and others.
Well, that's not all. Climate tech startup Nutrace backed $5.65 million from Sequoia Capital India, Avishkar, Speciale Invest, and others. Financial solutions provider for gig workers Karmalife raised $5.34 million from Artha India Ventures, Logix Ventures, and others. According to Venture Intelligence, this year has seen a total of 257 deals valued at over $3,413 million. With that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.